So I think Zoom, someone had to send me a request to record and it worked. I want to know why Zoom does not exist normally. I'm going guys, I'm coming. Can someone send me that request again? No, no, can someone send me the request to record like to the cloud, not for them to record locally? Can you guys hear me? Can someone send me a request to record to the cloud? Okay, I just want to confirm because this class is very important. I don't want to hang on. Let me try and see if I can update my Zoom on the App Store. Because I don't want there to be any issues with me recording this thing. There's nothing to. Okay, it says I can't record because I'm already recording. Okay, good. That record this thing. It's an issue. Well, I'm coming. I just want to ensure that I'm recording this. So I'll edit and I'll come back again to my link. So I want to make sure that I'm recording. Okay, guys, it's fixed. So I can see the recording is working now. Are you guys ready to start? You guys ready? Okay. So this class is on directional bias. This class is on directional bias, and it's a very, very, very important topic. Most people assume that is this one difficult thing to do, but it's not. Directional bias is actually one of the easiest things to see in the market because it deals with the basic structures that we already understand. We already have the three patterns of market movements: the uptrend, the downtrend, the ranging markets. So the directional bias relies on the structures that we already have an idea of, but relies on the higher time frame structures. When dealing with directional bias, my main focus is usually the daily time frame. What I would want to see on that daily time frame is the overall bias of the market, either temporarily or it's always going to be temporal because there's never going to one definite direction of the market. Well, maybe the market changes is subjected to market conditions or maybe economic events, or at least for the next month or for the next week or for the next 2 weeks or so, to understand the direction of the market. Do you guys also remember these BTCs? I'm very, very sure that I've been teaching you guys and I showed this BTC setup to you guys. 130 minutes time frame trade on Bitcoin. Because I'm very sure that I've been teaching and left that trade on, which is this 30 minutes order block right here. I'm very, very sure. So this is the trade currently now. I had this analysis all the way from, I made the analysis when the market was still here around this zone, all the way around 6th January, and they triggered around 24th, 23rd February, and it's currently playing out by the way of Ultimate TP. Now, why did I trust this trade so much? It's actually because of the confluence that directional bias gave me. You guys can hear me, right? Yeah. It's because of the confluence that directional bias gave me. Now, how did I get that trade? So let me show you guys all the way from when I made the analysis for the first time. It was yeah, it was here. Price was still here, 6th February, right here. See all the way here. So how was I able to get the trade? It's because of the confluence the directional bias gave me. So first of all, I tell you guys that for my directional bias, I pay attention to the daily time frame. For the daily time frame, I can determine the overall trend of the market. It's not even difficult to do. Hang on, let me clear a lot of things here so the chat can. What I'm trying to say is that so like I said, when dealing with directional bias, my focus is mostly on the daily time frame. Now, what do I actually look out for when it comes to dealing with directional bias? I focus on trend-like patterns. My bias is mostly always on what trend-like patterns. Because what's one thing you will notice in the market? Market is always mostly trending on the daily time frame. Overall, if you try to check, you will notice one thing. This is daily time frame for Bitcoin. From this September 24 all the way up here, market was trending to the upside. From this 21st January all the way down here, market was trending to the downside. From this zone, 8th April to all the way up here, market was trending to the what? To the upside. From from 7th October all the way down to this current level, market has been selling to the downside. So one thing is guaranteed, market is always going to be on a particular trend. Same thing here, downtrend, the downside. So it's always going to be a particular trend that market is on. It's guaranteed already. Market is either on an uptrend or it's on an up on downtrend. That's why all the directional bias that I do focuses on trend-like patterns. Now, what do I mean by trend-like patterns? So there are two types of trends that we have in the market: the uptrend and the downtrend. My own is to determine whether market is bullish or bearish on the daily time frame. And how do I determine that? By expecting a series of movements the market has given me. Remember, you are not your own is not even to look for the beginning of the trend, is to what to be able to join in those trends the market is giving you. Anyone that cannot open up the chart and look at the daily time frame to be able to identify whether it's bullish or bearish should go back to beginners class, because it's quite easy. There are two patterns of market movements. Well, for trends, the uptrend and the downtrend. It's already obvious that the uptrend is made up of a series of higher highs and higher lows, and the downtrend is made up of a series of lower highs and lower lows. All you need to do is to go to the daily time frame and determine if what the market is giving you overall is higher highs and higher lows, or whether what the market is giving you overall is lower highs and lower lows. So be able to identify the overall bias of the market. By overall, I mean the dominating trend of the market, because in as much as there's a particular trend, there's always going to be a buy and sell for that particular trend. If market is bullish, it's going to give you this and this and this and this. In as much as it's overall bullish in the daily time frame, there are still opportunities to catch sales from this zone to this zone, sales from this zone to this zone, sales from this zone to this zone. The same way there's an opportunity to catch buys from this zone to this zone, from this zone to this zone, from this zone to this zone. So the two movements, the one that's actually the main bias of the market overall is what you call the impulsive move. Whenever it happens, you call that the impulsive move. The ones that's the counter trend is what you call the correctional move. So if market is overall bullish on the daily time frame, you should expect market to give you an impulsive move and a correctional move, an impulsive move and a correctional move, an impulsive move and a correctional move. So there's always two particular trends to be taken when you're dealing with directional buys. You can always take the impulsive move, you can always take the correctional move. The thing is that the impulsive move should be traded correctly, the correctional move should also be traded correctly as well. Are you guys following me? Someone said my network is lagging. I don't, it's not possible. This is my speed test. Let me check my network speed. So let's check for something. What do I for something? It can be my network speed. Hmm? It cannot be my network now. It's over 60 megabytes per second. It's not my network. You guys are following me up. Can you guys hear me? Okay. Is network okay or is network not okay? Because it's not affecting me. If my network is okay, my trading is supposed to be lagging. And the fast.com literally says that I have 60 something megabyte per second speed. It's okay now. So, like I was saying, there are always two sides to every trend. There's an impulse move, there is a correctional move, which means market can be overall bullish on the daily time frame. They are still able to catch buys and you are still also able to catch sells. It needs to know when to look for the buys and when to focus on the correctional move of the sells. Now, first of all, it's quite easy to identify the overall bias of the market at that given time. For example, there's nobody that will look at BTC all the way from October or from November or from December that can tell that BTC is overall on a downtrend. There's no single person that should look at BTC there and not be able to identify that market has been worth selling to the downside. It's a very obvious thing. Why? Because you've gotten market giving you a series of lower highs and then lower low, lower high and then lower low, lower high and then lower low, lower high and then lower. So it's very obvious. You don't even need to catch the top of the movement. Mind you, you don't need to catch the top of the market movement. All you need to do is to what? to catch the ones the market has given you after some series of market movements. It's quite difficult to identify a trend just by a few moves. If you see market do something like this, and this is where you caught the market, it's actually it's not impossible, but it's harder to identify whether market is still bullish just by this single movement. But the moment you see something like this happen, I think it's obvious they can anticipate the next thing that may happen in the market, because the first one has already given you a higher high, gave you a higher low. Second move gave you a higher high, gave you a higher low. It's quite obvious to anticipate that market is going to give you what? Another higher low. So it's obvious to identify a down as an uptrend or a downtrend after market has given you a series of movements. You need structures to be able that have already presented itself to be able to identify or anticipate the next thing that will happen in the market. So it's based on what market has given you before that you can now anticipate the reaction later on. So same way, you don't just so if you open up your charts and at this level you saw market here, let's say from when market was in a downtrend, you saw price give you lower high, you saw this lower low, you saw this lower high, you saw this lower low, you saw this lower high, you saw this lower low. At this point, it's quite obvious to identify that market is in a downtrend. That's why I don't just focus on one pair, I trade about two or three pairs. You know why I do that? The moment the market has not given me a series of candle movements that can identify whether a particular trend market is on a particular trend, I can focus on another pair that has already done that. So on if it's on BTC, if market has given me this zone and push to the upside, does something like this, push to the upside again, does something like this and push to the upside again, it's quite easy for me to identify that this is what the pattern of an uptrend, because it's giving me a higher high and the higher low, a higher high and the higher low, and currently at what? A higher high as well. So what I should expect from the market is probably what? Another higher low. So it's quite easy to identify the overall bias of the market by the previous structures. Same thing, there's no way to open up your chart. This is BTC. It's even quite easy that you can just shrink your chart and identify the trend. If you shrink up your chart and look at BTC, you can clearly tell that it's been on a downtrend. If it was here, you can shrink your chart and tell that it's been on what? On an uptrend. If it was here, you can shrink your chart and tell that it's been on a downtrend. It's very, very obvious that there's no way you can open up a pair and not tell whether the market has been on an uptrend or whether it has been on a downtrend. Let's look at gold, for example. This is gold, right? There's no way that you open up your chart and look at the time frame of gold and not tell that gold has been what? Extensively on an uptrend. Here too, there's been an option, because why all it's been giving us is what? A series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high. So we expect a higher low next. So it's quite easy to open up your chart and say market has been on a downtrend, market has been on an uptrend, because the pattern of the structure that market is giving you overall can identify that. So it's quite easy. That's why started teaching you guys, taught you guys the basic ways that price makes its movement first. I said we have the uptrend, the downtrend, and the ranging markets. When dealing with buyers, we focus on the trending markets, which is the uptrend or the downtrend, which is the market giving you either a series of higher highs and higher lows for the uptrend or a series of lower highs and lower lows for the downtrend. It's not hard to identify, it's quite easy. Just go to the daily time frame, shrink up your chart a bit, you can tell whether market has been extensively bullish or extensively bearish with the way that the previous structures have already identified. So if the previous structure is giving you higher highs and higher lows, you can tell that it's been bullish. And if it's giving you a series of lower highs and lower lows, you can tell that is what? Bearish. Hope you guys are following me up. How many people's network is lagging? I mean their own not lagging. I will limit switch the network. I'm coming. Is this particular one better? I think I should check because I don't want to get interrupted by with this thing. I don't know if I ask people would they follow me or they say that they're asking this one is lagging, this one is lagging. Is this one better? I'm watching the network again. Okay. All right. So, like I was saying, it's very easy to identify the overall trend of the market by just going on your daily time frame and observing what the previous strategy is saying. Remember, candlestick patterns is what we trade. You need market to have given you some movements on the chart to be able to identify and anticipate what's going to happen next. So that's why we need some series of market movements, some series of previous movements on the chart to identify whether market is overall bullish or is overall bearish. There's no, even beginners, there's no one that you will show the chart of Bitcoin at this current level that will not tell you that Bitcoin has been bearish. There's no one that you will show the chart of Bitcoin at this previous level here that will tell you that Bitcoin has not been what bullish. So it's very easy to identify because if it's bullish, it's going to be trending to the upside. If it's bearish, it's going to be trending to what? To the downside. Now, knowing that market is bullish or bearish is not even where the main problem is. The main problem now is how do we now capitalize off of that? How do we now jump in and use those opportunities to the bullish market or the bearish market to actually make money on the market, to know where market is going to. So how do we know when market is at this process of this sell? And how do we know when it's at the process of what? This buy. How do we know when it's at the process of this sell? How do we know it's at the process of this buy? How do we know it's at the process of this sell? How do we know it's at the process of this buy? How do you know it's at the process of this sell? And how do you know it's at the process of what? This buy. So that's the questions that we'll have. So, like I said, for every trend of the market, there's always an impulsive move, there's always a correctional move. You can catch the impulsive move and catch the correctional move as well. Catch the impulsive move, catch the correctional move as well. So you don't just focus on trading just one direction of the market. If you know for the overall downtrend, you can still sell and still buy and still sell when it's time to sell again and still buy again, still sell again and still buy again. So that's why I say the bias actually changes. It can change for the impulsive move, and let's say it's overall bullish. The impulsive move means the overall bias of the market is bullish, and you're trading the buy at that particular moment. The market is bullish. Now, when it gives you like a higher high and it's giving you a correctional move, the correction basically means a retest or a retracement of the main bias of the market. If market is overall bullish and it gives you like a higher high, the correction I mean is for it to what to sell and give you a higher low before more move for a higher high will come in. But the thing is that those correctional moves still last for some weeks or some days, sometimes months. For example, this is a overall bullish move of Bitcoin. At this level, this is a higher high, but this is an impulsive move. The correctional move took from 23rd May till all the way to 19 to 22 June. So May, June, about a month for it to complete that cycle. So the correctional move can also be traded. Instead of you waiting for market to eventually become bullish, you can also still trade the correctional move of the sell and still trade the bullish move of the buy, still trade the correctional move of the sell again, and still trade the bullish move of the buy as well. So you can trade all these overall bias of the market and trade the correction as well, as long as you're dealing with directional bias and you know how to trade it what properly. Like this current buy on Bitcoin is actually the correctional buy. That's why you see my TP is not all the way to this top because I can still identify that market is overall bearish by just looking at the chart and seeing the market has been giving me a series of lower highs and lower lows for an extensive period of time. So this buy I took here is just like the same buy that happened from this zone, and the same buy that happened from this zone here, and the same buy that happened from this zone here. And as much as the market gave us buys from these zones, it's not for a long or an extensive period of time. It's not like the overall bias, it's just the correctional moves. In as much as I caught these buys, I also caught the sells from this zone, and I also caught the sells from this zone. So just because my overall bias of the market extensively is bullish or bearish does not mean I cannot still catch corrections here and there. The thing is that when it's bullish temporarily, you know that it's bullish. If it's bearish temporarily, you also know that it's bearish. But there are ways to ensure that you can catch the correctional moves and also catch the impulsive moves without making mistakes and jeopardizing yourself. Hope you guys are following me up. So I want to see if I can use another BTC chat that is clear. I don't want to mess up what I'm already drawing here. So let me see if I can use another BTC chat that is clear. I don't want to mess up what I've already drawn. Okay. I can use this. This is a fresh chart. So let's say we're analyzing BTC, right? We're analyzing Bitcoin, the overall bias of the markets. So it's very easy to identify that Bitcoin has been buried. Remember, to identify a particular trend, we need market to have made some series of movements in that direction to be able to identify whether it's bullish or bearish. Because you can't just identify a trend with just this move to the downside. You need multiple moves. So let's say it's giving us this impulsive move, this correction, this impulsive move, this correction, and then another impulsive move. At this point, it's easy for me to identify that market is on a downtrend with this, which is the market giving me a series of lower highs and lower lows. So at this point, remember this is daily time frame. So it means that this sell actually lasted for more than 2 weeks. It lasted from what? From 5th October all the way to um November 4th. So for more than 2 weeks, 3 weeks, 4 weeks, I would say, market has been selling. So actually, it's actually safe to say that market overall is on a bearish move. So if market's on a bearish move or on a bullish move, as long as it's a trend, there are always two things that happens. You will get the impulsive move, you will get the correction. You will get the impulsive move, you will get the correction. Now, the impulsive move is the move of the overall bias of the market. The correction is the counter trend of that overall bias of the market. You can trade both of them as long as you trade both of them carefully. As long as you trade both of them what carefully, but you can trade both of them. So now let's see what Bitcoin has been doing since. So it's overall bearish. It means it will give us an impulsive move. It will give us a correctional move. Now the thing is that we don't just it's difficult to pinpoint the zones where the correctional move will come from and the zones where the impulsive moves will come from. But for the impulsive moves, it's actually a lot easier to identify. You know why? Because for the impulsive moves, markets have to pull into some zones that price has already broken before more moves will happen. For example, if the market is overall bearish in the daily time frame, and this is the impulsive move, you expect market to pull up again. If it's an impulsive move, you expect market to pull up again. If it's an impulsive move, you expect market to pull up again. One thing you will notice is that it's pulling up at specific zones, the breaker blocks of the zones that market broke to create those impulsive moves. So if it takes out this low, it's mostly pushed back to this zone. If it takes out this low, it mostly pulls back to this zone as well again before more moves to the downside would come in. So if you notice one thing, that's what it's been doing. So when it took down this low, price pulled back into this zone for more sales to happen. If it takes out this low, market will pull into this zone. What was the last zone? Yeah, down here. What's the market pull into? This is a Binance manipulation candle. It does not exist because it does not exist in other brokers. So what I know is that there are zones that markets pull into for the impulsive moves to happen. If you check for the uptrend here, when it broke through this high, it put into this zone. When it broke through this high, it put into this zone. When it broke into this high, it put into this zone. So the zones that price break through, it mostly pulls into back into those zones before more moves in that direction will happen. If you check for the sell here, when it broke this low, it put into this zone. When it broke this low, it put into this zone. So the impulsive moves mostly happen it's always at a POI on the higher time frame. So mostly like higher time frame breaker blocks or higher time frame other blocks. But you don't just jump into the market once that happens. There's a way to confirm. You confirm it by market giving you what? A reversal concept at those zones you expect those reversals to come in. Both the impulsive move, both the correctional move need to give you a reversal concept to know that that zone is going to hold. But this is what I'm talking about. So let's say market is overall bullish. This zone that market bought from to be able to push market to this side would be a POI that exists on this side. This zone as well will be also another POI, mostly the other a breaker block or mostly an other block. And this zone here that market will also react from will also be another period. Remember when I was teaching you guys reversal concept, there was something I told you guys that you don't just expect reversals at any random place. Now, this is actually what I'm talking about. There are zones you expect reversals to come into the market. The zones I'm talking about are the daily time frame POI levels. So if market is overall bullish and is giving us higher highs and higher lows, higher highs and higher lows, there was a POI that exists here on the chart that made the market to give you this sell that triggered this higher low to be formed. There's a POI here that exists on daily time frame that made the market sell to this side. And the moment the market starts buying to the upside also, there's a POI that will exist here on daily time frame that made the market to push to the upside. And the market is to sell again from this level to give you another higher low. There's also a POI that exists here on the chart that made the market what sell to that level to this downside. And the moment it starts buying from this level as well, there's also a POI on the daily time frame that made the market to buy from this level. So market does not just give you these reversals, these higher highs and higher lows at random places. It's mostly always higher time frame point of interest. So if you check this zone, this sell, the impulsive sell that happened here came from this daily time frame breaker block here. But at the same time, the buy that came up that made the market push this also came from this other block here on this daily time frame, this entire block candle here. Now, we've already talked about this sell that came here. Now, if you also check, okay, now, if you now also check this correctional buy that happened here, it also happened from this other block here on the daily time frame, right? Then the sell came from here. After the sell, we expect what? Another what? Correction. The correctional move also came from this daily time frame other block here. So one thing is sure, for each impulsive move, price needs to trigger a daily time frame POI before it happens. For each correctional move, market needs to trigger a daily time frame POI as well before it happens also. So these zones are the zones that you actually expect those reversal concepts to happen in the market. So if market is overall bullish, or let's say bearish, because I'm dealing with a bearish market on BTC, if it sells here, if this is the first move, I will not pay attention to them. If I see lower low I see lower high, I see lower low, I see lower high. At this point, I'm already catching a drift of what is happening from these consecutive moves of lower highs and lower lows. I can tell the market is what? Bearish. Now, what I would expect what is what? A POI that exists on the chart here for market to trigger and give me a correctional move. Now, there are multiple POIs that you can see there, but the one you're going to trade is the one that market gives you a reversal concept off of. So even if you have like multiple POIs on the daily time frame, you can set to mark all of them. If you notice, this buy the market gave us not only it's in as much as market bought from this other block that exists in the daily time frame, it's not the only OB there. There's also another one here. But the difference between me trading from this last one and trading from this one here is because market did not give me a reversal concept from this one, but it gave me a reversal concept from this particular one here. So importantly, it's very important to mark out those higher time frame POIs, but also more important to wait for price to give you a reversal concept once those zones are triggered. If it does not give you a reversal concept at those zones, you don't need to look for any trades at that level at all. So remember, when I was teaching you guys, I told you guys that reversal concept is traded few times and continuation concept is traded more times. The reason of that is because the reversal concept is used to confirm the impulsive move or the correctional moves. But the continuation concept is basically used to trade in the direction of that new move of the market until the cycle of the move completes. This is what I mean. If this is an impulsive move and this is a correctional move, a reversal concept will be gotten at this correctional area. The moment you get that reversal concept, the market starts buying. If you're moving forward and looking to take a trade, the next thing you look out for is the market to take out this high, obviously, for the uptrend to be complete. Now, moving forward, you're not going to focus on what? Continuation entries and looking for trades in the upside by trading multiple breakout structures, inducement and POI, multiple breakout structures, inducement and POI until market eventually takes out this high. Now, when it takes out this high, and you see another zone for a correction to come in. Let's say there's another block that exists here on the daily time frame as well. And when you get this zone and price gives you a reversal concept at this level, moving forward, they're going to basically be bearish until price gets to another zone where another correction, another impulsive move will come in. So let's say that this is the zone we're expecting market to come down to. The moment market is bearish and coming to this zone, they're going to be trading continuations again of the current sell of the market, multiple breakout structure, inducement, and POI, multiple breakout structure, inducement, and POI until price comes towards this zone. When it comes to this zone, to know that this zone will hold, you expect another reversal concept at this level. Once you get that reversal concept, and market becomes bullish, you start looking for more buys by getting continuation entries until they complete the next cycle of the uptrend by breaking this high. Hope you guys are following up what I'm explaining. Are you guys understanding what I'm trying to explain? Hope is not stressful. Hope is not difficult. I'm trying to explain it as simple as possible. Okay. So basically what I'm saying is that for each overall bias of the market, you can always trade both sides of the market. You can always look for buys and can also look for sells. The thing is that when to look for buys and when to look for sells matters a lot. It matters what? It matters a whole lot. When to look for buys and when to look for sells, it matters a whole lot. So the impulsive move, you know when it happens. The correctional move, you also know when it's what? When it also happens. So now, how do we now actually trade it? So remember, when I was talking about expecting reversal concept first before you jump in and look for any trades. Now, let's start with what Bitcoin has been doing since then. The market has been overall bearish, right, for an extensive period of time on Bitcoin. Overall, what? Overall bearish. So market has been giving us a series of lower highs and lower lows. From these movements, you can identify the bias of the market. So let's say you caught onto the bias of the market at this particular level when price gave you these lower highs and gave you these lower lows up to this level. You caught that movement. So what you're expecting now moving forward is to get a correction move, an impulsive move, a correction move, an impulsive move. So the logic of the market is for each bias of the market, for each trend of the market, there will always be the main move, which is the impulsive move, and the correctional move, which is basically the counter trend. So at this level, let's say that we clocked the trend of the market at this level from this series of market movements. So we're able to identify that market is what overall bearish when it's giving us lower highs and lower lows. So moving forward, you can now start looking for the next moves of the market. So what do? We mark out zones that price can possibly pull into for us to look for the more for trades in the same bias of the market. So first of all, what I would do is to mark out the zone that price may possibly pull into. If you check, this low was broken. So obviously, the zones I'm expecting price to pull into is this breaker block level here. So since I'm expecting market to pull into this zone, what you do is to wait for price to pull into that zone, then you go to lower time frames to get your confirmation. That lower time frame confirmation is to get your reversal concept on the lower time frames. That is why I told you guys that you trade the reversal concept few times and the continuation concept more times. The moment that market wants to move from this zone, before you push from this correctional zone to this upside, it already gave us a reversal concept down here. Now moving forward, as long as it's approaching this zone for the impulsive move, market is going to be at a continuation entry kind of trade. So you're going to focus on multiple breakout structures, inducement, and point of interest until price comes to this level on the daily time frame that you marked out for more sales to come in. Let's assume that at that level, price is already here. So what do? You go to the lower time frame, then you go to that one price is already at that level. You go to your lower time frames, then you go look for your confirmations. Your confirmations is basically what? Your reversal concept. So your reversal concept for markets at the level that you already marked out is very important. So let's say I'm going to go to the zone where this happened, which is here. This is where I marked out this is where I marked out. It's actually clearer here. This is where I marked out the breaker block. So now, I'm expecting what? A reversal concept to happen in the market. So what did I get? When did I get the reversal concept? Well, it's actually not. I think let me go to the 1 hour time frame. There's a lot of notes on this 30 minutes time frame here. No problem. I think it's because of the broker I'm using to analyze this. But let's say, yeah. So this is where market triggered that zone that I marked out on the daily time frame. So overall, you're going to be expecting a reversal concept. Market was what? Previously bullish, giving us a series of higher highs and higher lows. While approaching that zone, we're expecting that impulsive reversal from. Now, towards the end, market what? Triggered the zone, and next thing it did was to break the last low that market gave us here, giving us a market structure shift. After that, it gave us what? A pullback, which is this, and then push back to the downside, take out the body closure of this MSS candle right here. After that, the nearest point of interest to your inducements would be this breaker block here. So with this, we already confirmed the move to the downside. Remember, you don't take the trade if you've not confirmed that reversal concept at the level you expect market to give you that reversal from. So with this already confirmed the next impulsive move because price hit the zone I'm expecting the reversal to come in and then gave me a reversal concept. So you've already confirmed the next move for the impulsive move. What do you now do? You go to daily time frame and then you observe the overall pattern of the buyers that you're on. So market overall is on a downtrend, and the downtrend is made up of a series of what? Lower highs and lower lows. What I'm talking about is that each impulsive move will take out the previous low of the market. So for example, overall move of the market is bearish, right? Which is lower highs and lower lows. Lower high, lower low. Lower high, lower low. Lower high, lower low. What do you notice? Each correctional move, once it's ready to make an impulsive move, will take out the last low that the last impulsive move made. Each correctional move, when it's ready to sell and to the downside, it will take out what the last low of the last impulsive move, which basically means that the bias of the market is bearish, and the logic behind the bearish market is what? Lower highs and then lower lows. So what does that mean? Where is the last low of the last impulsive move? Is basically what? It's basically down here. What that means is that what the next impulsive move I will have, since I've already gotten the correctional move and confirmed the next move to the downside from this zone that I marked out and I got the reversal concept from, it means I'm going to trade the market until the last low in the market gets taken out. So what you do to so I already marked out the last low in the daily time frame. I can now go to the 1 hour time frame and then take my sell and then know where to place my take profit level. So I've already marked my sell entry from where it's supposed to be, which is this MSS, the inducement and the POI. Since I've already marked it out, the next thing I'll do is now keep my take profit level. So this low is the last low of the last impulsive move of the market. It basically means that low is going to be taken out based on the logic of the trending markets, which means if it's an uptrend, each new high will take out the previous high. And if it's a downtrend, each new low will take out the previous low. This down here is the previous low. It means that the new low that will come out has that the new move that will happen, if I already confirmed the next move to the downside, should take out this previous low. So moving forward, this is going to be the overall TP for the bias of the market. But moving forward, my focus will now be on what? Looking for either continuation entries to take out this low, or I can just hold one position all the way to this low being taken out. So I can just take this trade. So remember, if I don't get that confirmation, I'm not going to look for any trade at this level. This confirmation is very important to tell you that that zone you marked out is going to hold. Without that confirmation, do not jump into the market. As long as you are taking your POI from the daily time frame, or you're getting, as long as it has anything to do with you confirming the impulsive move of the market or the correctional zone of the market, ensure that when price hits the zone, you're expecting that reversal to come in, you wait for a reversal concept on the lower time frames. If you don't get that reversal concept on under the 30 minutes time frame or the 1 hour time frame, do not. You can even get on the 15 minutes time frame. But trust me, if you don't get a reversal concept at those zones you marked out from the market that you're actually expecting a reversal to come in, don't jump into the market, or else you're going to regret it. There's only a few times that you can actually mark out these zones and enter without confirmation, and markets may respect you. Maybe you being lucky. So remember, like I said, the reversal concept is very, very, very important as long as you're dealing with a zone where market is either going to give you a correction from or giving you an impulsive move from. So it's very, very important. So now we're already taking this trade to the downside, and our complete bias is for price to take out the overall low from this overall trend of the market. Now, the mistake that people make is this. Let's say market is overall bullish. Let's say, or let's even stick to the bearish. It's overall bearish, right? The bearish market is giving us lower high and lower low. After some consecutive moves, I was able to identify that market was bearish, and I was expecting market to come to this zone for a small sales to happen. At this level, I went to the lower time frames and I was able to confirm that market was bearish because I got a reversal concept at this level for my inducement and I got my point of interest. Now, it's now time to complete the cycle of the downtrend by market giving me another lower low by taking out this previous existing low here. So that means the overall bias of the market is what bearish until this last low has been taken out. Now, tell me why you've already gotten price pull into your zone that you're expecting the reversal to come in. You've gotten the reversal concept there. You waited for market to pull into your point of interest. You are now selling the market to take out the overall low. That overall low have not yet been taken out, and then you start looking for buys in the market halfway. Why? This is what I mean. Market is overall bearish. You marked out your zone, price put into your zone, gave you a reversal concept here. Your overall target of the market will be to complete the cycle of the downtrend, which is to make another lower low. The lower low have not yet been made. They're not the way here, like halfway here, you start looking for buys in the market. Why? The cycle of the trend you're on is not yet complete. So why are you looking to oppose the direction of the market? Let's follow me up. So do you guys understand what I'm saying? So what I'm saying is that both the move of the market have corrections, they have impulsiveness. But what I'm saying is that you don't cut the cycle of the trend half. You don't cut it halfway simply because as long as the zone you marked out already gave you that reversal concept that the bias overall is going to hold. There is no point opposing that directional bias until it completes that cycle. Now, let me tell you something. When markets now took out this low, because overall it will take out the low and even go much lower. My focus when this low gets taken out is the low has been taken out. The next thing I would expect market to give me is what? Another correctional move. So what I do is either I look for zones that exist below this zone where market may give me a correctional move from. So I start looking for possible points of interest so I can mark out this zone, which market did not respect, did not give us a reversal concept here. But the obvious one I saw was this other block all the way down here, and I marked it out. Now, what I would wait for market to do is to hit this level and also give me a reversal concept. So this is the impulsive sell that market already gave us to the downside. Next now we expect is what? A correctional buy. So this low is to wait for market to trigger this zone and give me a reversal concept. Without market giving me a reversal concept at this low, I'm not going to look for buys. So let's see what market did when you go to that level. Let's go to like the 1 hour time frame when price go to the zone that I marked out. I think this is the zone. This is it here. This is it here. I think the reversal happened like 30 minutes time frame. This 1 hour time frame is not very, very clear. This is the zone here. So when price hits the zone that I'm expecting the reversal to come in for the correction, what would I do? I'll go to the lower time frame, which is this. This is it here, 30 minutes time frame. So what the market do? Before it approached this level, it was on a downtrend, giving us a series of, you can see the lower highs and lower lows. Towards the end, you can see lower high, you can see lower low, lower high, lower low, lower high, lower low, lower high, lower low. Next thing the market did also will take out this high, giving us the market structure shift. So when this high got taken out, we got the MSS. This is the pullback, the nearest point of interest being this breaker block here. So when this happened, and I marked up my POI, I just noticed something for BTC. The confirmations happen mostly on the 30 minutes time frame. That's one thing I noticed. So when market hit this zone and gave us a reversal concept, gave us the inducement, and then this POI getting triggered, that means that what market is what going to give us a correctional move. So that was what actually happened here. So what do? You take the correctional move and you target the nearest zone that market may buy to for the impulsive move to happen next. So if you check from this level, I'll buy to the next zone that market will possibly reverse from, which is what all the way to this level here, this breaker block. And you can also check your TP level with the lower time frame types of liquidity that I taught you guys. So if you check, you can see if you sell those types of liquidity and you can take your profit of the correctional move there. So where is it? Yeah, for example, here. So you can target this high here or this high here, the last swing high in the market there. So this is trendline liquidity. If you guys don't know what I'm talking about as a TP. But one thing is for sure, I didn't just jump into this market when price hit this level. I waited for an extra layer of confirmation when price hit that level. So, like I was trying to explain to you guys, it's actually not difficult to pinpoint the zones that price will give you the correction from, or to pinpoint the zones that price will give you the impulsive move from. The important thing is to wait for market to come to those zones and then give you a reversal concept. Where you may not even be clear on the other zone. That reversal concept confirmation is what matters. If you guys notice something on BTC, all of us marked out a zone on the 4 hours time frame, on daily time frame, market was selling, and we expect the market to buy from that level. I think a lot of people had that zone, which is this breaker block on this time frame here. Where is it? I think let me check daily time frame. A lot of us had that zone. A lot of people marked out that zone, including me, myself. I marked out the zone as well. This is this zone here. Yeah, this zone here. This breaker block level. The last time the market was selling to the downside, this is the zone here. So because after this correctional move, that there came the impulsive move. A confirmation entry was also given to us here for the impulsive move to happen. Now, when the impulsive move was going on, the next thing I would do is to mark out zones where price may possibly come and start buying from again for another correction. But the thing I noticed is that markets came. This is the zones I was expecting it to happen. This breaker block here. Another zone would be this other block here. The other zone would be this other block down here and this one down here. So all these zones were zones that I marked out and I was expecting price to buy from. Trust me, at that particular moment, I had no idea where market was going to buy from. Trust me, I have no idea at that moment. All I was waiting for was an extra layer of confirmation, which would be my reversal concept at any of these levels. If market gave me the reversal concept of this one, that's where I would have taken the buy from. If you gave me the reversal concept of this one, that's where I would have taken the buy from. If you gave me at this one, that's where I would have taken the buy from. But it did not give me a reversal concept at any of these zones. Price used an impulsive move to sweep through all of them. The one I got my reversal concept from was this one down here. So trust me, I was not sure about any of those zones at that moment. The moment I became sure was when price eventually hit that zone that I was expecting that reversal to come in, which is this one. So let's check all these zones here. You see what I'm talking about. The first zone hits, and then there was no layer of confirmation there. Second one hits, no confirmation. Price just kept breaking through all of them. This is the third one hit, no confirmation until price hits the fourth one. Remember, this long candle wick here is not part of this. Is manipulation for the. I'm using Binance broker here. This is manipulation. It's not on other brokers. So this was the word. This is where it stopped here. This candle wick is not included. I don't know why it's showing here. Manipulation candle. So this was what market was giving us, a series of lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It was on a downtrend. Then it hit that zone. I was expecting the reverse. It wasn't only this zone. I had marked out a couple other zones. If market hits this zone here, and instead of doing this, it took out this last high, I would have considered taking the buy from this move here. But it did not. Instead, it maintained the downtrend by giving us another lower low. It did not give us a reversal concept at that level, so I did not look for a trade at that level. But when price hit this other level, this other block I marked out down here, after it hit the other block, what did it do? It took out the last high and closed above the high, giving us a market structure shift. Remember, that's why I kept saying that there are zones we expect reversals to come in, which are these daily time frame zones, daily time frame order block, daily time frame breaker block. The two other blocks I'm talking about are the ones for the correctional moves or the ones for the impulsive moves. That's the two blue eyes I mean. So for reversal concept, you have to wait for price to put into certain levels. And the only time you're ready to look for reversal concept is when market is about to give you a correctional move on daily time frame or the impulsive move on the daily time frame. Either one of these two is when you mostly expect reversal concepts to happen in the market. So this is the MSS that we got. After that, price gave us a pull to the downside before pushing back to the upside. This pull to the downside is retracement and is what our inducement is, right? This is the inducement here. After that, what next are we going to look out for? The POI. Now, POI is what? This other block, because the breaker block here has already been mitigated by the inducement candle, which means our buy would come from this other block here. So once I got this analysis, this confirmed the next move to the upside for me. So all I had to do was wait for market to pull into those zones, and that was where I took my buy from. That was how I got the analysis, and that I was able to trade the market. So this was where the buy. Now for my TP, I have to get the what? Trendline liquidity or the last swing high. This is the last high I could see, but at the same time, I can literally say it's trendline liquidity. Yeah. And target this as my TP level. That was where my buy came from. And then my TP is the high for the trendline liquidity. So why am I taking my TP there? Because there's still a possibility that market is still overall bearish, and then we'll come up to this level, and then more sales will happen. So there's a possibility that market will do that, taking this high out, and then come here, give me another reversal concept, and then more sales will happen, and this low will be taken out. Once the log is taken, what's next thing I will do? I will look for another zone where markets will give me another impulsive move from, probably at this breaker block here on the daily time frame. Here, it can be here, or it can be at any other PI. But one thing is for sure, before I'm going to take any trade, I have to get an extra layer of confirmation, which for its market giving me a reversal concept at this level that I marked out. So let me take the process from scratch again. First things first, go to the daily time frame and identify the overall bias of the market by monitoring the pattern of the current trend of the market. By the pattern, I mean what structure is giving you. So the market is overall bullish. It's going to be giving you a series of higher highs and higher lows on the daily time frame. And for you to confirm that, it needs a series of movements that have already happened in the market to be able to confirm that. So market needs to start giving you an extensive move of like 3 bounces for the downside or 3 bounces to the upside, or at least minimum of 2, to be able to confirm if market is overall bullish or if it's overall bearish. So if this is the overall bullish market, you will see market giving you this. So at this level, you've confirmed that market is bullish based on this high, this higher low, and higher low, and this higher high, and this higher high. You've already confirmed it. Next thing to now happen is to what? To look for the zones where the correction can come from or the impulsive moves can come from. So for example, remember, the correctional moves I'm talking about is not for all-time highs. It's difficult to pinpoint the zones where market will give you a correctional move on all-time highs. That's why at all-time highs, we focus mostly on trading the impulsive moves. The reason why BTC sell, I could trade the correction and the impulsive move is that there were previous price actions existing on BTC already down here. So I can actually use those other blocks to know where the correctional moves will come from. But if it's for like a bullish market, when BTC was bullish at this level, this is an all-time high, it was difficult to pinpoint the zone where the corrections will come in because there was no previous existing price action. So the correctional moves, to know that you're going to use the right correctional, you need to make sure that there were previous price actions in the market to be able to identify where the other blocks exist or breaker blocks exist that you may probably look for a reversal concept to happen. If there are no previous price actions, I would suggest you stick to trading only the impulsive moves because markets will mostly come to the last zones that was broken for the impulsive moves to be created before another impulsive move will go happen. So, like I'll take the step again. Get the direct overall bias of the market on the daily time frame by studying previous structures of the market. So the previous structure can either be bullish or bearish. It's going to be giving you a series of higher highs and higher lows on the daily time frame. Remember, daily time frame, or lower highs and lower lows on the daily time frame. Identifying that, so if it's the bearish one, you will see something like this. At least some movements that have happened in the market to be able to identify that market is bearish. Daily time frame. Remember, daily time frame. So after that, the next thing on your mind here, if there were previous price actions, let's say there were previous price actions here before market started selling, it means that there are zones you can actually expect the correction moves to come from. So probably like an order block that exists here is the zone you're expecting the correctional move to happen from. Same way, if there were previous price actions here, it can be an order block here that you're also expecting a correctional move to happen. So that means the correctional move is meant to lead you to the upside for price to sell more from this level. Now, neither one of these zones should be taken without confirmation. The confirmations you're looking for is a reversal concept on the daily time frame at each of these zones when price comes to any of them. So remember, at this level, on this correctional zone PI that I marked out, before market can start buying, we need to confirm a reversal concept on the lower time frames. So like the 30 minutes time frame, where price is at this level, you have to look for market to give you a reversal concept. So on the daily time frame, it can just be market giving you this move and coming down here. But on the lower time frame, like the 30 minutes time frame, this move can just be something like this occurring. Lower highs and then lower lows. Then you certainly get a reversal concept, an inducement. And then this second push to the downside was price coming down to now trigger your point of interest. Once this happens, our market is still at this level, we are expecting the reversal to come in. That is the correctional reversal. That means the market is now bullish and is going to now buy till this level. So once you start buying, you can use the lower time frames. For the correctional move, you can use the lower time frames to determine where your TP would be. Because if it's the impulsive move, it's very obvious where your TP would be. If this is the, for example, if this is the impulsive move here, it's so obvious that you're going to sell until your market takes out this low, right? But if it's the correctional move, you can't really buy until market takes out this high because it's a correctional move. So you can buy to this level, but to be sure, use lower time frames and all those points of interest, on all those types of liquidity I taught you guys and how to take your profit. You can just use that to take your profit in the lower time frame. So on the lower time frame, you've already gotten this confirmation. Next thing is that market is going to buy until it gets to this correctional level. But for your TP, go to the lower time frame and use the types of liquidity I taught you guys to take your profit in the market. So on the type of liquidity, you can spot probably like trendline liquidity here and be able to take your TP in the market using that. So overall, market is going to buy. You'll probably buy, do something like this, do something like this, then do something like this as well. Take out this high. As long as it has not gotten to the zone we're expecting market to get to overall, you can keep looking for continuation entries until price gets to that zone. So the first trade can be you taking the buy to this level and you close. The second trade can be you getting this multiple record structure inducement and taking another buy from this breaker block, target this high, and then you close. Overall, you are looking to take the market to buy until it comes to this level where another impulsive move is going to happen. So the reversal concept is at a one-time thing. At the zone you're expecting market to give you the correctional move from. Moving forward, as long as you're not looking for trades that confluences buys for the market to come to this zone for impulsive moves, you now focus on continuation entries, which is your multiple break of structure, inducement, and your point of interest getting triggered, right? And then you keep looking for trades in that direction until market hits the overall TP by either like the lower time frame types of liquidity or the higher time frame zone that you expect that reversal to come in on the daily time frame. So once market hits the zone, you stop looking for buys. At this level, you're now looking for an extra layer of confirmation where market comes to the zone, you're expecting the impulsive reversal to come in. Are you guys following me up? Okay. So now you've taken the buy to this level where you expect the impulsive reversal to come into the market. Now, at this level, you don't trade the market yet because market, this is daily time frame. So markets may come here, deep into this zone or come to this level. But the one thing that will tell you that it's ready to start selling is when you get the reversal concept. So at this level, one thing you're going to be waiting for is for price to give you what? Another reversal concept at that level that you marked out. That reversal concept basically means market giving you the MSS, the inducement, and then your point of interest getting triggered. So that is one thing that you should expect market to give you at that level. MSS, inducement, and then your point of interest for getting triggered. That is one thing you should expect market to give you at that level. So on the lower time frame, on the daily time frame, this is market at the level. It might give you this kind of pull to the downside on the daily time frame and then come back here. But this move that just happened here can be this on the daily time frame. Higher highs, higher low, higher high, higher low, something like this. The market giving you this. MSS, inducement, and then your point of interest getting triggered. Once this happens, you've confirmed the next move to the downside. So once you confirm it, what are you going to do next? You're going to sell until price completes the cycle that makes up the downtrend. So what cycle makes up the downtrend is what? Lower highs and lower lows. We're already at a what? At a lower high. Next thing the market is going to give us is what? A lower low by taking out this last low and even going below it. It's going to go below it. And if it goes below it, next thing it's going to look for is another zone where more buy corrections will come in, which is the market is going to sell. Remember, the sell will not start from here. Because this is the daily time frame, market is not going to hit the sell zone, the overall bias of the market in just one day or 2 days. Most times it can last for a week. Most times it can last for a month, sometimes it lasts for 2 weeks, sometimes 3 weeks. The important thing is that as long as market has not hit the overall bias of the market, you can always take those trades using continuation entries to find trades in that direction of the market until price hits the overall TP. So, for example, this is the overall TP for price to sell until this low gets taken out. But since it's daily time frame, market will probably not hit this in even a week or 2 weeks. So that means wherever you take your trade and stop, you can look for trades in that direction until market hits the overall bias of the market by hitting this low. So this can literally be the market. It will sell, and we can take your TP here. And when that price does something like this, you can look for inducement again, and then take another entry from this breaker block of this multiple breaker structure, inducement and POI. You take the trade, you keep looking for trades in that direction until the next trade can be this, look for more sales until price hits the overall TP on the daily time frame. By the overall TP is by completing the cycle of the downtrend by taking out this last low. Once this happens, you either map out the next zones that price may give you a reaction from. So it may be another block that exists down here. So you can mark out this other block level, also mark out maybe the breaker block level here, and also mark out maybe another other block level here. But at this point, you can already safeguard your profit towards the next zone that price may give you a reaction from. You safeguard your profit and you close the trade. Next thing that you're waiting for is now the next move that will give you a correction to the upside for more sales to happen. So this zone, or this zone, at this point, we are not sure of the one that market will give us a reaction from. For us to be sure, we have to wait for price to hit those zones on the daily time frame. Then on the 30 minutes time frame, we'll get our confirmation, which is the reversal concept. That's why I said reversal concept is traded a few times when market wants to start the correctional move and when it wants to also start the impulsive move. So at this level, the MSS occurred at this level here at the same time. But the continuation levels, the continuation trace occurred after this MSS got after we got this MSS, moving forward, as long as market was buying to this level, all we should do here was continuations. The price go to the final level for where the impulsive sell will come in. Once you get a reversal concept of that impulsive sell, moving forward, you have to focus on continuations again until price completes the cycle of that downtrend by taking out the last low. So the reversal concept is traded few times because it's mostly used for the correctional confirmation and also the impulsive move confirmations. But as long as you're not taking trades in whichever direction you're taking it in, moving forward, you have to focus on what continuation entries. So same thing here. The moment price takes this zone out, you have to wait for market to give you a reversal concept of any of these levels, for you to know that this is the level that market is going to give you the correctional move from. Because remember, for each particular trend of the market, there's always going to be the impulsive move, and then there's always going to be the correctional move. It's a must. There's no trend whereby market does not give you an impulsive or a correctional move. This BTC, by when it broke this high, that is the impulsive move. The correctional move was the sell that brought market to this zone that price broke. Imagine this. I think Binance is highly manipulated. Do you know why? Because this zone triggered on other brokers, but no, that it did not trigger on Binance. This is Binance, right? This is Binance. Check the difference. This is even this one too. But let's check another broker. That's why I use Coinbase. Let's check Coinbase. You see the difference? This is the same zone. Let me clear it. This is the same zone on the daily time frame on Coinbase. This is the same zone and price triggered it. So I use Coinbase. I don't use Binance because on Binance it would have missed this daily time frame zone, this breaker block on the daily time frame. Are you guys following me up? Someone said, "What if the POI I want to use for the correction has been mitigated? Can you use it?" No, You can't. You don't have to use a mitigated point of interest for your correction. In fact, the POI has to be a clear POI for you to use it. It's not, for example, this breaker block. The correction, I couldn't look for corrections for this uptrend because the uptrend was at an all-time high. So I couldn't trade corrections, but I could mostly always trade the continuations, the impulsiveness. So overall, market was bullish from these movements it gave me. Higher high, higher low, higher high, higher low. So it was at a higher high. So what I need the market to give me is what? The correctional move for a higher low to be made. So this is the zone I was expecting market to come to, which is this high that was broken. So I was expecting market to retest the zone of those high and then give me a reversal concept there. So when I marked out this zone, what was I expecting market to do? Come to this level and give me what? A reversal concept. So when I marked out this zone, I wait for price to come to that level. Then when it comes to the level, what I'm going to do is to go to the lower time frame and then look for what? My confirmations. The confirmation I'm looking for is a reversal concept. Without getting that reversal concept at that zone you marked out for your either your correction or your overall reversal, you should not take that trade. So towards the end of market approaching the zone I marked out for the impulsive continuation. See what market did. You can give me lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Next thing it did when it triggered that zone was to give me a reversal concept. So after the reversal concept, I got my inducement and I got the nearest point of interest, which is what? This other block. Okay. So this confirmation tells me that market is what? Overall bullish. So what do I do next? I'll go to daily time frame to identify the logic behind the trade that I'm taking. The logic behind the trade is that after each higher low, there comes a higher high. After each higher low, there comes a higher high. So at this point, I'm at a higher low, and the last high of the market is what is here. That means I'm expecting market to buy until the new higher high has been formed, which means my TP is going to be at this zone and price is going to even break it. So that was this trade. Yeah. So after this, next thing I'll do is to mark out another zone that price broke through that I'm expecting market to come down to. And I marked out this level here. This is zone I'm expecting market to come to before more mostly upside can happen. So when I marked out the zone, I wait for price to come to that level and I'll see if I get a reversal concept while market is at that level for me to take my trade. Remember, I was not taking the correctional moves of this market because why? There was no previous existing price action. So I cannot really pinpoint the zones where those corrections will come in. If there was previous price actions, I could easily mark out the zones I was expecting market to give me the corrections from. But there was no previous price action. Like for example, this is the correctional move that came in here. It was easy to pinpoint because there was an order block existing here. That was why I was able to take the trade that caused this particular correction. So there's no previous price action at this high. So I can't really pinpoint the zones where the corrections can come in. But if there were previous price actions, like for example, this BTC sells when it was bearish, there was previous price action. So it was easy for me to identify the zones where price can give me the reactions. You understand? But for this impulsive, for this bullish one, at this zone, it was already at an all-time high. So it was difficult to pinpoint the zones. Yeah. But for the BTC sell, while it was selling down, the overall bias of the market became bearish. There was previous price actions here for me to expect market to give me corrections from because market had price actions already existing here in the market. I think even when markets should sell from this zone, there's also another zone here where markets may even give us another impulse, another correctional move, which is down here. I didn't even see the other block. So market may even give us a correctional move at this other block down here, which is at this 55K level for this BTC. So if it goes up here and it gives me another reversal concept for telling me that this is going to sell more, if it takes out this low, I will be expecting a reversal concept at this low. If it does not hold, that means the market will go lower into this particular one here. If it does not hold, it will go lower to this one. If it does not hold, it will go lower to this one. That's how we analyze. We don't just jump into the market without confirmations for the zones that market give us a reversal and a correction from. So this is the next zone. This high that was broken, I expect market to retest the high before market will move to the upside more. So when it triggered the zone, what would I do? I'll go to the lower time frame and I'll get my reversal concept at that level that I already marked out for price to come to. So I've already done the bearish one. I did the bearish one already. So now I'm doing the bullish one. So the zone I'm expecting market to come to that I marked out for price is this level here. And what the market do, when the market came here for the correction, it sold all the way down here and then gave us, when it triggered the zone, it took out the last high here, giving me a reversal concept. After that, it gave me an inducement. And then the next thing it did was to trigger my other block here for a buy. This was the zone that market bought from. Now I've already confirmed this buy. The next thing I will do is to understand the logic behind the current buy of the market so I can know where to put my overall target. So what will I do? I'll go to the daily time frame and I will find the overall bias of the market, which is the what? The bullish market. And for the bullish market is what? It consists of higher highs, higher low, higher high, higher low. So after a higher low, what should come next? The question is for you guys. For the bullish market is what? Higher highs and higher lows. Market has given us a higher low and we've already gotten the confirmation. What should come next? Exactly. A higher high. So what that means is that I'm going to buy this market until price takes out the previous high. And where is the previous high? Right here. So that means I'm going to be bullish until this previous high in the market gets taken out. So either I can hold one position all the way up there, or I can close at nearest draw on liquidities and still use continuation trades to find more trades to the upside until price takes out that high. So this is it. Either I take this trade and target this overall high, or I can close in between and still use confirmation entries to look for more buys until price takes out that high successfully. This is what multiple breakout structures, inducement, breakout block. So remember, as long as the market is what moving in that direction, you look for trades in the direction with continuation entries. So I can take the first buy from here, and then get the second buy from these continuations that can still target that high. Another continuation I got was from here, multiple breakout structures, inducement, breakout block. Another buy from here to set target what? The high. So there are multiple opportunities for us to jump into the market if you missed any of those trades, even from this breakout block here. So there are multiple opportunities to jump into the market if you missed any of these trades until price eventually was successfully buys to take out this overall high. Then you can stop. So basically, this is I've been teaching for a long time actually. But basically, that's what is all about. That's what the bias of the market is all about. Identify the overall trend. Know that there are two sides of a trend: the impulsiveness, the impulsive move, and then the correctional move. The impulsive move basically be at will happen at higher time frame points of interest, like the zones that market broke while creating the impulsive move. Price is more likely to retest those zones. The correctional moves will also come from previous existing POIs on the daily time frame, like the daily time frame order block or daily time frame breaker block. But one thing is important: before you take any of those trades, whether the impulsive one or the correctional one, it is very important to expect a reversal concept at any of those levels before you can now take your trade to the other side. So if you have gotten a correction, next thing that will come in is the impulsive. And if you've gotten the impulsive moves and it has completed the cycle, next thing that will come in is the correction move. After the correction move, next thing that will come in is the impulsive move. After the impulsive move, next thing that will come in is the correctional move. But one thing is for sure, both of them have to happen at higher time frame points of interest. Without those confirmations of that higher time frame point of interest, you should not be looking for any of those trades there. So that is so for directional bias, that is that. So it's quite easy to identify the overall bias of the market. It's not difficult at all. So for example, this is gold recently. So gold is bullish. I'm going to talking about currently now is bullish because it's giving us what? Higher highs, higher low, higher high, higher low, higher high, higher low, higher high. So market is what currently bullish. So the reason why this sell that happened is happening here is because this is what a daily time frame order block, right? So this is what this part of this sell that happening. What do you call the sell? It's not the impulse. The sell is what the what part of the bias. Exactly. The sell is the correctional part of the bias. And the reason why it was easy to pinpoint was because there was a previous existing price action here, which is the other block. Same way, this one is what? The higher high, the higher low, the higher high, the higher low, the higher high, the higher low. It was easy to identify this correction because there was a previous existing other block here. Same way, there was also a previous existing order block here. So that's why it's also easy to identify this correction here. So the market triggers the zone. All you have to do is to look for a confirmation. The confirmation being the reversal concept. This is the zone here. The reversal concept. So the market came here and took out this low. We got the MSS, gave us an inducement. The nearest point of interest is what? This other block here. So that was where the sell started from. So moving forward, we're now going to expect market to give us continuation entries until we complete the cycle of the sell by either looking at the nearest drawn liquidity by targeting like the trend line liquidity we have in the market until price is ready to give us another impulsive move to the upside. So it's quite easy. All you need to do is to go to the daily time frame to identify the overall bias. It's not difficult to identify overall bias. No one will look at the chart and see gold building up momentum for higher highs and higher lows and say that market is overall bearish. It's not possible because it's been giving us higher highs and higher lows to the upside. All you need to do is know when to look for the higher high and when to look for the higher low. So for you to get the correctional move, it means that market triggers a PRI on the daily time frame where a sell would come in for another impulsive move for a buy to come into the market. So if there's no previous price actions, it's harder to identify. But if there is, it's easier. So, like I said, I will take it step by step again. Get the daily time frame. Go to the daily time frame, first of all. Secondly, use previous existing structures to identify the overall bias of the market. If it's bearish overall, you will see lower highs and lower lows. At least three consecutive moves will tell you that, or at least two consecutive moves will tell you that. And if it's bearish, you'll get lower highs and lower lows. Some consecutive moves will also tell you that. After that, the next thing to do is to now identify whether you're at an impulsive zone or at a correctional zone. So if market is overall bullish and you're at a higher high, that means the impulsive move is done. Next thing to expect is a correctional move. But if market is bullish and you're at a higher low, that means the correctional move is done. Next thing to expect is an impulsive move. But either one of the two will require a confirmation at the zones that as a higher time frame point of interest. So if it's the correctional move, before it can happen, you have to mark out previous existing or POI on the daily time frame that price can give you a reaction from. For the correction, for the impulsive move, market will mostly pull into the zones that price broke through for the previous impulsive move to be created. So, for example, market broke through a high to create a higher high. Market will most likely pull into the last high that it broke before it can give you more impulsive confirmations. So, whichever one that market is at, you need a reversal concept confirmation to know that any of those zones are valid. Once you get that reversal concept confirmation, you now take the trade. If it's an impulsive move and you're looking for another impulsive move, you take the trade to the next high. If it's a correctional move and you're looking to sell it to the next impulsive move, you take the trade all the way down to the place where the next impulsive move is going to happen. So that's basically that for. So it seems lengthy, it seems difficult, but it's not. I dissected it for the easiest way possible, where you can, on how you can get this bias. So that's basically what I do. There are two things I do just to know whether it's at an impulsive zone or the correctional zone. The reversal concept will tell me what I'm going to know about that zone. If it gives me a reversal concept at any of those zones, I will take my trade. If there's no reversal concept, I will know that market is not ready to make an impulsive move yet, or it's not ready to make a correctional move yet. But once I confirm that reversal concept at any of these zones, moving forward, I will now focus on looking for continuation entries until the market gets to the next zone that I'm expecting market to get to. Hope you guys understand. So that is that on directional bias. That is that on directional bias. So what I want you guys to do for me now is, we have another session that is question session. We have a question session. So what I want you guys to do for me is, first of all, watch all the recordings for all our classes. Watch everything one after the other. The first class, second class, the third class, this fourth class. Watch everything. Jot down the questions where you have difficulties in. Then this directional bias, go to different pairs and then check this thing I just told you guys, backtest it there. Check and notice that it's the same thing that market does. There's always a correctional move, there's always an impulsive move. There's always the correctional move, there's always an impulsive move. So what you need to do is now get those things and mark out the zones where those reversals. Just backtest what I taught you guys on the chat. Check different pairs that you trade, you will see it there. Gold, GP, JPY, and check different pairs. No, the recording is playing, it's still playing. I already fixed it, it's working now. Check those things that happened. Check what I taught you guys here. Different pairs, what happens? Focus on trend like patterns when you're dealing with bias. Treat bias like it's a trend, because it's always a trend. Bias is always a trend, either an uptrend or a downtrend. And for every trend, there must always be an impulsive move and there must always be a correctional move. So for you to know where the impulsive move will happen, is the zones that price broke through for the previous impulsive moves to come in. So once you get those zones, the market needs to give you a reversal concept for those, so you need to know those zones will hold. Once that reversal concept is done, trade continuation concept onto the next level by either making a lower low or a higher high. Same way, after market has made that impulsive move and it's ended, the next thing that will come about is a correctional move. The correctional move, if it's not an all-time high, it will occur at what? POIs on those daily time frames. You mark out those POIs and you wait for price to get to anyone and give you a reversal concept there. That reversal concept is what? It's a confirmation that that POI for that correction is going to hold. Once you take the trade, your TP will be before the next zone where you expect the impulsive move to happen again will come in. So as you're taking that correctional move, if you've not gotten to the next impulsive zone, you keep looking for continuation entries, multiple break of structure, inducement point of interest until price gets to the next zone where the impulsive move is going to happen. Then once it goes to that zone, for it to confirm that zone is going to hold and that reversal constant at that level. That's basically what I do. That's the only thing I trade. It's not difficult if you make everything easy and simple. It's not difficult at all. So, like I said, all the class recordings, watch everything, every single thing. Take down the questions that you have, advanced questions, not, well, I know I trust you guys. Then we're going to have a session where we're going to have just a question session for the places that you guys are having difficulties. And I'll give you guys a few days to get everything collective and have the questions down. And I'll give you guys a session also have the questions. Hope you guys understand. Okay, somebody shout power. Okay. Someone said, does that mean we have to mark our zones on the higher time frame? Yeah, the impulsive and the correctional zones. We mark them on the daily time frame. So I will send the recording once it's done processing, and I'm going to open up the group chat for you guys as well today. So, all right, that's it for today's session.